If an investor, a lender, a grant reviewer, or a funding partner walks into your business right now and asks for your business documents, will they be ready? Hello and welcome to the CEO Money Management Challenge. Today I'll be walking you through lesson 4, which is building a fundable business. Why do other businesses get approved while others get denied? Let me ask you a question before we go further. If an investor, a lender, a grant reviewer, or a funding partner walks into your business right now and asks for your business document today, would they be ready? Not hopeful, not almost ready, but actually ready. Because here's something I've learned during my years of banking. Most businesses don't get denied because of potential. They get denied because they lack preparation. And today I'm going to show you what makes a business look fundable. Let's talk about preparation there, because funding is rarely about luck, it is about readiness. An example, business A and business B. Business A has $15,000 in revenue. No bookkeeping, no financial reports, mixing funding, that is mixing business and personal finances. They have late taxes. While business B on the other end has $8,000 in revenue, a clean financial record, organized finances, business banking account separate from personal account, and is tax compliant. Which business do you think gets approval? There you go. Here is what I'm hoping you've realized. Revenue is not everything. Organization matters. Because there are several things a lender, an investor, a grant founder looks for before approving your business. And here are 5 of those things. 1, structure. A good structure has a LLC, not a sole proprietorship, a LLC. Or LLC or corporation that is separate from your personal self. Your EIN, that's your tax ID. Strictly connected with IRS for tax purposes. Business banking account. And again, in our past 2 lessons, remember we broke down the accounts you should have. A serious business has more than 1 account because we're doing several things, right? So if you haven't seen those videos, go back and watch them. Under structure, you need to have your LLC, your EIN, and a solid separate business bank account. A legitimate business needs a legitimate foundation. Number 2, let's look at financial visibility. Revenue, expenses, profit, and cash flow. If you can't explain your numbers, neither can anyone else. Number 3, let's look at cash flow. Money in, money out, your balance. With your current income and your current expenses, can your business survive a slow month or several slow months? Compliance. Under compliance, these are what you need to have. Your taxes filed, your licensing specific to your industry, your annual filings or biannual filings because it varies per state. So you want to know what your state reports are, whether it's annually you need to file or it's biannually, but you want to keep on top of that. You want to be in good standing so that you don't get shut down or inactive. I've seen so many businesses lose great opportunities all because they weren't maintaining the right paperwork. These businesses thought, oh, I got registered 3 years ago, 4 years ago. I'm eligible for funding by now. Whereas they weren't on top of their annual filings. And guess what? The state had them as inactive. And when a lender pulls your record, when a grantor pulls your record, the first thing you want to know is this business legit in this state? Does this business exist? And when you go over there on the corporate search on your Secretary of State's website, they see that you're inactive. No, they're not going to deal with you. You don't want to deal with someone like that. You wouldn't, would you? Would you want to hire a contractor that have an inactive license? Would you? So you want to make sure you're on top of your business annual filings. Now, credibility. What credibility does for you is it puts you out there. You know, all the beautiful logo, the marketing, the things that you like. Ooh, it's this part. The compliance piece, you're like, great waters. But then when they say marketing, everybody wants the beautiful website, the beautiful logo. So let's talk about it. Credibility, website, your business email, professional presence. You're going to show up. Even if it's a brick and mortar, you want to have that professional person, your business banking, financial reports. These are equivalent to a trust. Now, let's look at funding red flags that you need to be really mindful of. Mixing personal and business money. No bookkeeping. Missing your tax return, not filing tax every year. That is a no. Overdraft on your business bank accounts. That's a no. No financial statements or no systems. You want to have your systems in place, okay? So now let me ask you, which one of these applies to your business today? Identify it, because you need to start to fix that now. Let's address the business readiness score. These are some of the things I break down in my business readiness audit. If you haven't taken that audit yet, comment audit below and I will send you the link. My website is the redeemadvisorygroup.com. You'll see that business readiness audit right there. It's a 22 question that helps give you clarity on where your business is at and the things you are missing. And guess what? It gives you your score. Let's just go over an example of what that score is going to look like. So everything we just listed should be 10 points across the board. Structure, 10 points. Finances should be 10 points. Cash flow should be 10 points. Compliance, 10. Credibility should be 10. And looking at these scores, majority of entrepreneurs don't even know where they stand. And that is why they stay stuck. You cannot improve what you haven't measured. Let's look at the readiness ladder. We need you to move from chaos. If you are feeling chaotic right now, confused, overwhelmed, stuck, want to get from this point. Want to get to becoming organized. From organization to readiness. From readiness to opportunity. From opportunity to growth. Most businesses focus on opportunities. The most successful CEOs focus on readiness. The funding lesson. Banks, lenders, grantors, investors, they do not fund emotions. They fund evidence. Revenue is evidence. Financial reports are evidence. Cash flow is evidence. Organization is evidence. Because here's the reality. The most ready businesses attract opportunities. They attract the right fundings, partnerships, investments, contracts, and growth. So, are you funding ready, or are you ready to get funding right now? I would advise you take the business readiness audit. Comment audit below and I'll send that link to you right now so that you can evaluate where you are. Because here are some of the questions I need you to start to ask yourself. Do I know my numbers? Are my finances organized? Are my taxes current? Do I have my financial reports in place? Will I be ready if an opportunity appears tomorrow? Here's the thing. Today wasn't about loans. It wasn't about grants. Today wasn't even about funding. Today was about becoming the type of business that opportunities can trust, because funding follows preparation, growth follows structure, and opportunities follows readiness. In the next video, we'll be bringing everything together. CEO wealth and cash flow planning. We are going beyond making money. We are talking about keeping it, about growing it, and about building long-term wealth. So I'll see you in the next video.